This feels like a completely different era. I feel like I entered, I feel like I walked into a portal and I'm like on a whole different side of I don't even know, like in a whole different universe nowadays. Um, Welcome you guys. Thank you guys for watching. Like, comment, subscribe. Um, Today, I feel like these videos might actually be a bit shorter than before because I cut down about maybe 95% of the amount of trades or the amount of opportunities that I look at on a weekly, daily basis. I think it's gives you a better, I don't know, I just learned it from excuse me, I learned it from multiple sources to stick to a few things. I think a few of the things that allowed me to accept looking at only a few pairs, such as gold or NASDAQ, is, for example, listening to people who are in the trading industry, and some people might call them gurus. I think, they're still inspiring people like myself, regardless of, how many times they post and stuff like that. And regardless of the fact that some of them do sell courses or whatnot. I still take certain things with a grain of salt, and I also think about it to see if it actually makes sense. And I think cutting down the amount of trades that you take, or not even trades, but the amount of, commodities or, indices that you look at on a daily or weekly basis, it should help you cut down the amount of trades you take. It'll cut down the amount of, it's almost like a diet. Like it's almost like you're fasting, but it's like a long-term fast because, you don't, once you start, you want to stick to one thing. You want to stick to one thing, which is stick to what's working. And if you see if, for example, gold is working more than, you know, maybe gold might be working, commodities itself might be working more than Forex does, then just stick to commodities. If, indices work, and also you find that commodities are way better than Forex and it just moves better in your favor of how you trade and how strategize your entries and your setups and stuff like that, then it makes sense to just maybe stick to commodities and also stick to indices. So I think narrowing down, filtering out the types of, the types of securities that you're willing to trade. Um, I think it's a healthy way to go about trading because it's also setting you up for success. The way that it sets you up for success is that long term, you'll start seeing if you're journaling, actively journaling, you're going to start seeing in your P&L statement, hey, I'm no longer losing $800 a week. Or, hey, I'm no longer losing $200 a week. I'm actually, maybe you're somebody that's losing less, right? You could be in that stage where you're losing less, or you could be in the stage where, oh, I'm seeing that I'm winning more, or um, you don't even have to be winning more. You could just be profiting more because you don't have to, it's not always about the amount of times you win. It's, it's really about the risk management because you can lose more trades than you win. And by the right set of risk management, um, by the right process that you manage your risk, that can, show up with a winning strategy or winning P&L. It's not always about the amount of times that you win or lose trades. So yeah, it's taken me actually years to know about that, but unfortunately, of course, I wish that I knew about that earlier. That would have pushed me forward 30, $40,000 in red. Um, but yeah, I mean, that's over the span of like 6 years, so it could be worse. I guess I look at it as my tuition. I look at it as my tuition just like anything else. If you're somebody that's in sales, you're gonna most likely start off in the red in order to start seeing green. Um, but these videos are probably not going to be too long, and because the videos that I was posting before, I was like going through a list, a laundry bag of different pairs and potential opportunities. But if I'm only showing you guys, one or two ideas that I have for the week, then just because I'm only starting to look at, maybe one or two pairs, which I'm going to show you here in a second, then, the video is not going to be too long because there's not going to be that much to talk about. So I'm gonna go ahead and, give you guys a quote out of my Market Wizards book, which I think every trader should honestly read this book because it's not only it not only implements great ideas into your trading strategy, but it also helps you think as it helps you understand, your behavior. And it also helps you understand emotional control. And when you have emotional regulation, you're able to individually regulate your emotions without anybody having to say anything, or even if somebody does say something to you, it also helps you regulate, your emotions and stick to what's working, and then that allows you to build a mental block or mental framework so that you can execute on your ideas instead of, considering everybody else's, regardless of how many times you've heard XYZ from this and that person. You can be disciplined enough to stick to what's working for you. Um, it's almost like your word versus 100 men, right? Um, if you're the ant out of all these other ants that's speaking up and saying something, maybe you're right. Maybe you're not crazy after all. So I think that's something to take into account when you're thinking about, what this person's saying, what that person's saying, what you saw on Instagram, what you saw on Twitter, what you saw on social media, what's happening in the news. I think based on, what I've read and my personal experience and the my my journaling, I think it's safe to say that um in addition to the technical analysis that I speak on every week and that I, you know, work out, I think implementing fundamental analysis, it's like a cherry on top. Honestly, it feels like more than a cherry on top because it gives you even more conviction to hold on to your trades. Not only are you holding on to your trades for more profit and because of your fundamentals, stating that it makes sense to, but with more conviction from the fundamental analysis from news and stuff like that, it also gives you a better idea to start trailing your stop loss. Um, maybe you might start taking a little bit of profit and stuff like that, or you might even be adding positions to the direction of the market. So I think a lot of these things that I'm, explaining to you guys is interesting. And a lot of what I'm speaking to you guys are coming from books because I'm reading virtually every day. I try not to go a day without reading. Um, Obviously, if I'm like busy or something, and or maybe I don't feel well or something like that, it's not gonna be the only time that I'm not reading. But I do my best to read every day, and for the most part, the books that I'm reading on a daily basis are gonna be books that has something to do with the markets. So recently, I've been telling you guys I've been reading Market Wizards, and I'm still reading Market Wizards. I'm not a quick, fast reader. Um, when I was in school, I had ELS. I had an ELS class, English or ESL. ESL is English second language. Although I was born in New York and although my parents are immigrants who migrated to this country and I was born in New York, um, And I was able to be, I don't know. I wasn't born in a different country, so I don't really understand why. I do and I don't understand um why I was put into ESL, but honestly, I don't really see it as anything to be ashamed of because I know that I know that I know what I'm capable of. So with me knowing what I'm capable of, it allows me to understand, what I I don't know. I guess you can say I understand like, my worth, I understand my values and stuff like that. I understand that you can position yourself for success. I understand a good amount of ways to put yourself in position to be, you know, um, well off without having to, you know, I don't know. I guess, yeah, I just want to skip that, but because I lost where I was going there. Anyways, so Paul Tudor Jones. This chapter is on Paul Tudor Jones. I'm gonna give you guys a quote. Let me know what you guys think about it in the comments. Paul Tudor Jones. So he's being interviewed by Jack Schwager, and uh he's asked by Jack Schwager, very few traders have reached your level of achievement. What makes you different? He says, I think one of my strengths is that I view anything that has happened up to the present point in time as history. I really don't care about the mistake I made 3 seconds ago in the market. What I care about is what I'm going to do from the next moment on. I try to avoid any emotions or any emotional attachment to a market. I avoid letting my trading opinions be influenced by comments I may have made on the record about a market. So this pretty much shows you guys that the mentality of Paul Tudor Jones is forget, right? Wipe away the emotional attachments that you may have had with the most recent loss you've had or the most recent losses because you could have had back-to-back losses. You take a third loss and then now you're like completely destroyed, and then you might even take a fourth one and you make another loss. Now you have four back-to-back losses, and now you're thinking, well, does it even make sense for me to continue trying? You might even give up on the week, and it could be Monday. There's been times for me personally where I've, had back-to-back losses for maybe even 1 or 2 weeks, but you don't see me giving up. I'm here, right? I'm making YouTube videos literally every single week documenting the journey. And I'm gonna document my journey until I start seeing thousands of dollars being profited on weekly basis, and I'm most likely not gonna stop because this is a YouTube channel that I, want to nurture and continue to add value for people or to people for free. And I want to really build a community. So if you guys can like, comment, subscribe, and also join the Discord. Link is in the description. It's a free community and I share ideas on whether I'm entering or not entering, maybe even why I'm entering the markets. So just keep that in mind. So what I will do is I'm gonna share my screen, and this is going to be so this is gonna be trading view, and this is also gonna be what it is called my P&L, which is Trade Locker. I mean, not Trade Locker, that's my platform, what's it called? Um well, I actually thumbnail for this video, I'm most likely gonna put how I made $200 last week. I think that's what I'm gonna, excuse me, put as a thumbnail, or maybe something related to how I was able to make $200 in the markets. So yeah, what am I gonna do? Okay, yeah, I'm gonna share my screen. And the account size is only like 300. It was like $300. The account's equity now is around like 500 and maybe 50 or $40. Let me check right now. Switch to live account. Hold on. I gotta make sure. Well, I'm not logged in, and then I'm gonna have to go to my email to log in and stuff like that. So I'm gonna have to go to my email. In the meantime, I'll just transfer you guys over to start looking at my screen. You guys should be able to see my screen. Next, I'm gonna start looking for that email where it has my my account information. Is it? It's not here. It's not here and it's not here, then it might be here. Oh no, can't be here. Maybe here. All right, I'm not finding it. I don't want to take up too much of your time, so I'm gonna look for it later. But what I wanted to do is, oh yeah, I'm sharing my screen. All right, so what we're gonna look at is we're gonna look at the direction of the markets. So I think been what's been most successful for traders, it seems like, is is trading gold and Nasdaq. I think that it respects market structure. Um, and what I had you know what I had thought about this week, which I seen a couple of traders actually take advantage of this move. But Sunday opened, right? And if you guys have been watching in my, how I put like I put rules and stuff like that on I create like a rules type of underwriting guideline for myself. And it's almost like the size of an ID card. So one of my rules is that I'm not going to trade on Sundays. Unfortunately, if I did take advantage of the opportunity which presented itself on Sunday, I would have been up. I mean, it's not unfortunate, but it's unfortunate because I didn't take advantage. So let me show you what would have happened. So what would have happened is if we go back to here, which is Sunday, which is yesterday, you can see market was like, consolidating since Friday, right? So consolidating since Friday morning, because here's the New York, 8:30 candle. This is a 15-minute time frame. You can see there was a bunch of consolidation. So I'm here thinking we might get price to come into this imbalance right here, but at the same time, I see that price pushes up and the price push up that it did here, it creates this range. So during this range, you can see this is the new range. So looking at this range that we see right here, just by looking at this range, all you have to do is go down. So this is a 15-minute time frame. If you look at the 1 hour, look, I mean, who wouldn't think that price wouldn't go down, right? Who would not think that price would not go down? This is a good range for it to drop and take people out and then, like collect, people's orders and stuff like that, then push price into the bullish direction. But if we look at the 15-minute time frame to the 5-minute time frame, so this is yeah. So what happens is price comes down and then it takes, and I was expecting something like this to happen, but okay, so you can see that price drops down, and then after when this market closes on the 5 minute time frame, you can see price starts going bullish. Honestly, I don't think I would have actually bought this though. Just by looking at how this setup looks, I probably wouldn't have bought it this. Maybe if you're trading maybe 2 minute time frame, you could have caught it because this or maybe 1 minute, but I think only people who trade 1 minute would have gotten to caught this at a good price. The rest of us, if we're looking for to catch something, we'd have to caught something maybe like right here. Um, but yeah, I mean, if we're, looking at trading this market, 15-minute time frame, maybe you want to look for a 15-minute pullback before entering. Boom. So this could have been an entry right here. Stop loss below here. And then now what could have happened just by trading the 15-minute time frame, knowing that this is distribution, knowing that this is distribution, boom, now you got a 1 to 2, right? And then you keep on raising your stop loss, right? Your stop loss keeps on getting trailed. So as you're trailing your stop loss, now you're just continuing to maximize your profits. And then, because price keeps pushing down to um, do what it's doing. But right now you would have had a 1 to almost 3 if price was, if you're still in the markets, could have like a 1 to 2.9, 1 to 3 if you're still actively in the markets after taking price, um, if they're entering here. These aren't my type of trade setups. I know people who do trade like this, but I would rather not. Um, I would rather not right now. So this is something that I'm actively learning, and this is just not a way that I'm currently trading right now, but I might in the future. There's no really, there's no telling what really might, happen. Um, let me explain, let me see if I can explain how I first I gotta see what my entry was last week in order for me to make the $200. Figure out what price did I buy? Price did I buy gold? So I'm gonna have to take out Trade Locker. I mean Trade Locker. I keep saying Trade Locker. Let's look at TradeZilla. My net P&L is actually it's actually bad. I've been looking at things percentage wise instead of um dollar dollar figure. Yeah. Um, Here, let me show you guys dollar figures. 92, 78. So 92 on Friday, 78 on Sunday. What does it say? I honestly don't even know how to like, did I buy here? Like I can't even tell. 8:30 on Friday, I think. Let's see, 8:30 on Friday. Let's find it. 8:30 on Friday. So it would be this Friday here. Ah, okay. All right, so here's how I made um here's how I made $200 last week on a $300 trading account. What do you call it? So it's $106, right? So take home $106 off of that trade plus did the 92 merge or was that 78, 59, 59? So I closed out, I think I closed out this trade the next week and 78 was what I also closed out last week. So all of these trades I closed out last week. I went in on Friday, but I closed it the following week, if that makes sense. Excuse me. So that's why collectively I'm saying $200. Excuse me. So $92, $78, and then you got -19, +97, +59. So as you can see, the winning days are better than the losing days, and that's what you want. You're not gonna have 100% winning days, um, but you just want to make sure that your risk is minimal and when you're right, you're striving for, to maximize your profits. And I'm going to give you an example of how I did that. Specifically on gold. So last week, as you can see, what I did was I looked for that Friday position that I entered, which is on a Friday at around 8:30 in the morning. And that was around here. So that would have been somewhere here. All right. So let's backtrack. I'm going to do a replay and we're going to have the market here. So as you can see, right, if we look at the 4 hour time frame, it's bullish. If we look at the daily time frame is also bullish. And what's most likely going to be taken out is this right here, right? Because that is the most recent high on the daily time frame. And if we're bullish on the daily time frame, then we're going to want to hunt this. And in order for us to hunt that, we and want to get into a move on our way up, we're going to want to start scaling down time frames. We would scale from daily to 4 hour, considering that the daily is bullish. The 4 hour is also bullish. 1 hour, right, is also bullish. And if we look at the range of the 1 hour, you can see that the range of the 1 hour is here. So this would be the lowest point of the 1 hour, and this would be the highest point of the 1 hour. If we're seeing that this is the range, now we're gonna scale to maybe 15, 30 minute, and 5 minute time frame. Right? So if we're looking at the 30-minute time frame, we can see it looks like consolidation. What about the 15-minute time frame? It also looks a bit like consolidation. What about the 5 minute time frame? It looks like price is, what time is it here? All right. I mean, price is like 5 o'clock, 5 o'clock. You also want to kind of consider the time too. So we can look back and look at maybe London session. Where did London session? Okay, so this was a London session candle right here. And you can see both lows and highs of the 5 minute, 5 minute. London session candle got knocked out. So I would consider if we're gonna push up, we're probably gonna take out London's low before pushing up. Also, the reason I would say that is because if you look at let me look at the 15-minute time frame. I mean, I wouldn't consider buying this until this this candle right here, the 15-minute candle has closed above here, right? And you can see price looks like it wants to fall down even more. So let's look at what happens. Price does fall down a little bit more. Now let's also match with, match the times. So we're getting closer to New York session. If we're getting closer to New York session, we're gonna want to see price maybe even give us a 5-minute market structure shift. Now, if we get a 5-minute market structure shift, that would mean price would have to close above this candle here on the 5-minute time frame. Boom, right? We get the 5-minute candle closure. Now, if we start buying around this point after this candle closure, and then we put our stop loss here, we would be targeting either this high or this high, right? The highest daily high. This is the highest daily high. Now, what I normally have been doing is I don't use the take profit. It's personal preference. Um I rather do a trailing stop loss because there's been many times where price is in a distribution phase and price just keeps on running. The same way that gold is running right now is the same type of, trading opportunities you could remove yourself from, unfortunately, if you have a quick take profit level. Me personally, I was trailing this and then I seen the 1 hour time frame close bearish, but then it went back to bullish. So I followed my rules and I took myself out, but you know, or it was actually about to close bearish, but so I kind of went against my rules, but at the same time, I still want to build cushion in the trading account because it's a less than $1,000 account. I really want to go over 1,000 to start, holding trades for longer, so that it helps me scale this account. But yeah, as you can see, price did hit my take profit. However, like I just told you guys, I don't use take profits. Once price came here, I started to, look at 5-minute and 15-minute time frame to consider whether it made sense to, come out, but then price kept on pushing up. And what I did was trail my stop loss. So now this is my new stop loss around here, which means that I technically secured, this was technically a 1 to 6, but it's still trading. So while it's still trading, I'm still capturing. I think I scaled down to the 1 hour time frame, and then I pretty sure, yeah, price did that. I came out on this wick right here. So that's why it became like a 1 to 7. And you can probably even look and see that this right here, if we look at the 106, it was maybe it was this one. I don't know. But it was a good one. It was a good 1 to 7 trade for me. Unfortunately, I didn't hold. If I did hold, I would not be, chasing the markets the way that I am now, which is why, these moves don't come every day. So you want to make sure you're paying attention. And sometimes you might lose, a couple times before catching them, in order to stay in and trail it. But yeah, that's pretty much how I was able to make, uh, $200 last week, which is by trading the same exact way that I'm explaining to you guys now. Trailing stop loss, no take profit, but it's personal preference. I am pretty much at the point where I'm able to understand the different time frames being in sync. So you're gonna have to start studying the daily down to the 4 hour, 30-minute, 1 hour if you want to implement the 30-minute, you can. It's not, something that I always do. but it is something that I still look at when taking entries because I think the 30-minute is pretty solid when it comes to, your entries. And if market structure is actually uh taking effect. So it is used sometimes in my confirmations. Not really necessarily a deal breaker, but it is something helpful. It builds conviction into your trades. Um, yeah, so daily, 4 hour, 1 hour, 30 minute, 15 minutes important, 5 minute isn't that important, but it's also something to consider when scaling down and understanding the time frame alignments. So you're taking, daily bias and then you're scaling down to see if the 4 hour is also bullish or bearish. Um, Definitely 1 hour to see if that's also bullish or bearish. And then you're entering around 15-minute time frames, sometimes 5 minute time frames. So yeah, that is what's pretty much working. Because if we even look at that area right there, you can see the 15-minute time frame did also shift. So that itself could be, a 1 to 6, right? 1 to 6 right there. That's a 15-minute break of structure. If we look at the 5-minute break of structure, 5-minute break of structure would be roughly around what's the low on this? 406,580. Close on this is, yeah, so this would actually be that is a 116. So if you were taking this opportunity on the 5-minute time frame, your your profit would be 1 to 16. Now, if it was taken and you came out where I came out, which is around here, then it would be just verify that that was it. Because I remember looking at it on the 1 hour time frame. Yeah, so I came out around here. Would have been like a 1 to 5. So yeah, I think that's what I did. Think that's what I did. Because if we look back at the 92 and then we look at the 106, you can see, I don't know. I mean, it says 1 to 0.65. I don't, sometimes I'm still trying to figure this out. Um, but yeah, it's pretty much it's pretty much that. So what I'm looking for on gold right now is let's actually X this out. What time is it? It's 9:30. There could be some movement here. Um, you can see that this was a 15-minute bullish candle here. So 15-minute bullish candle here, came down here. 5-minute might have broken around here. Well, 5-minute. I mean, this is the 5-minute. So if you wanted to answer here, it could have been like a 2-minute structure shift that you looked at, but not necessarily how I trade. So I'm not really pushing for those kind of opportunities. That's why I'm not in it. However, if we look at what I analyzed this week, is that one, we're at all times high, right? So we've already taken out that price point where I told you guys about, which is here. This is where I wanted to target, and yeah, or way past that now. Could be further. Honestly, we're pushing pretty close, and 4,000 is pretty long way. So we might get a retracement before going to 4,000. Now, if we look at the daily time frame, we can see that daily has made a newer low and a newer high. So I'm going to tell you guys what I think is going to happen. What I think is going to happen is being that we have, I'm going to mark this as the daily low, and then being that we have this as the daily high, I'm expecting the 1 hour time frame to drop and give us clean a clean direction to this imbalance down here. Why do I say down there? I say down there because if we look at the 4 hour time frame, there's so much consolidated 4 hour candles, right? If you're a hedge fund and you're looking to collect orders before taking price up, you're a big institution. I think this is something to be, pretty alert for. You want to be alert for these things because there's a lot of orders sitting here. This is one, two, three, four, about four, maybe four and a half times four. So that's 4, 8, 12, 16, 16 and a half. Or actually not even and a half, because that, yeah, I mean, whatever. It's about 16 hours that there's just price consolidating. And not only that, this candle is a Friday 4 hour candle. This is a Friday 4 hour candle. This is a Sunday, Monday candle. Now, usually, if you're an experienced trader, you know that a lot of times Sunday, Friday, Monday candles get taken out. Mainly Sunday, Monday candles get taken out. Um, or from experience, that's just my experience. I normally see Sunday and Monday candles get taken out. So if I already know that there's consolidation here on the 4 hour time frame, and I already know that Monday and Sunday's low is located right in the consolidation, and there's an imbalance below. I'm gonna want to consider taking price up. So I'm gonna set an alert here. We're above the EMA, and our daily directional bias is up. It's bullish. So I'm gonna wait for the price to come back. I might consider selling into the imbalance, this imbalance here. I may consider selling into this area right here. I think it's really going to depend on how structure positions itself, how they position themselves here to see if it's worth trading. Because I normally don't do, I haven't been heavy on external to internal trading. I really haven't. Just be mindful, 1 hour is completely bullish. Um, mm, I'd rather wait to catch price than like chase price going down. It's just, I would have to risk 50% less than what I normally risk. And I'm already only risking about 1 to 2%. So, and as you like look at what's going on right now, you're gonna have to, I mean, it's not a terrible idea to sell into that imbalance, but so here's what I'll do. I'll consider it depending on how clean structure starts to, play out. Next thing that I want to show you guys is NASDAQ. So NASDAQ, what I'm anticipating is I wanted to enter around here, but the 15-minute time frame didn't give me a good enough entry for me to enter. As you can see, this would be my typical entry point. I would usually enter around here, but we didn't get a market structure shift until price already closed above here. And then for me, that wouldn't have been a good risk to reward because essentially what I'd have to do is I'd enter around this price point and then my target would be like, this would literally be my target. It's 1 to 85. Like, that's not even a 1 to 2. So that's the reason why I didn't enter. I've been waiting for a re-entry because I just don't believe that price is gonna continue moving up. If it does, it leaves me. If it doesn't, that's gonna be my best alternative for me to get into the markets. And if we look at, excuse me, if we look at the 4 hour time frame, you can see that we had a, so this would be a 4 hour, 4 hour, be a 4 hour high. 4 hour, right? This would be a 4 hour low. After seeing this is a 4 hour low, then we see all these other, internal structures or structure points you can see here. This would be our next 4 hour high, and then this would be our 4 hour low. Perfect. Now we see 4 hour high. After seeing this is a 4 hour high, now we can consider that even though 1 hour time frame is showing us that we're bearish, we can wait just for, I mean, Monday it probably created, what is this? Okay, we got a 15-minute. So 15 minutes shifted from mm, bearish now to bullish. So what about the 30-minute? 30 minutes still indicates bullish. Who knows what's about to happen? I mean, I would rather wait until I get a better understanding of price, which would be stemming from the 4 hour time frames, most recent low and high, which gives us this range right here. That's why I marked 4 hour low, 4 hour high. Now, after seeing that, I would want price to come into at least 50% in order to start and then start looking for, 15 or 30-minute structures on those frames. Um, yeah, so and then if we look at areas of interest, daily you don't really see much areas of interest. 4 hour time frame though, you do see one, two, three, four, four areas of interest, four taps of the area of interest right here, not including this wick right here. Then if we look here, even lower, aside from this wick right here, you can see one, two, three, four, five. So five touches at this area of interest. I think this one might be more important to look out for market structure shifts on the smaller time frames to indicate whether we're going to start buying price. Um, Goal is to take this out and potentially push even higher. So I'm thinking that this might happen this week. Hopefully it does. I have my alert set for here. I'm gonna make sure that I have this one turned on as well, just in case. And then I haven't really found anything lower. I mean, you can go lower, but this has already pretty much taken out this imbalance. However, if for whatever reason price wanted to push even lower, I mean, you can see maybe one, two, three. I guess you can count four. So one, two, or one, two, three, and then four. This could be four right here. I really don't see this happening, so I'm gonna delete this. Regardless, I'm gonna start looking for price to come at this around this area. And yeah. So yeah, that's my rant for today. I hope you guys enjoyed this video. Like, comment, subscribe. Remember to join the Discord. It's free, free community. Um, I'm gonna continue spreading as much value as I can, and hope you guys learned something from this video. And yeah, enjoy your week. Today's Monday. Happy Monday. Enjoy your week. Stay blessed and thank you guys for watching.